Okay, good afternoon, everybody. Today is December 16th. It's Friday. The market just closed about 10 minutes ago. This is your weekly take on the market. I am your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to look at our disclaimer. I am not licensed. Nobody at IBD is licensed. We don't offer buy, sell, hold ideas. We don't offer personal advice. I can't tell you what your asset allocation should be. I can't tell you what types of stocks you should trade, whether you should be a day trader, a long-term trader, etc. We do fall under a compliance umbrella, but we do have skin in the game. Almost everybody I know at IBD trades / invests based on their own personal style. So it's it's definitely one of the perks of working here. So please take a moment to read this. All right, so we'll start with the market thoughts, then we'll do industry groups, some stocks to watch, and then the quote of the week. So let's go in reverse here. Normally I start with the indexes, but I'll just show you a couple screen grabs. Last week I had a ton of screen grabs because I hadn't done one in a few weeks, but just a couple of things that I thought were interesting. This individual investors have lost $350 billion this year, according to Bloomberg. The average retail trader's portfolio is down 30% in 2022, according to Vanda Research. And according to JP Morgan, retail traders are down 38% this year. So I don't know how they're getting this data or how they're, putting it all together, but, obviously three prudent, respected firms, and it's been a tough year. It's been a really tough year, honestly, for most people, I would guess. The average stock is down a lot more than the indexes. I'm not going to beat that horse to death. I've talked about that 100 times this year. But so, if you're having a tough year, everyone is, and I say everyone, I mean, most people, if you've been able to sidestep the carnage this year a little bit, maybe you're down a little bit, you've done a really good job. If you happen to be up this year, you've done a fantastic job. I feel like I've done a pretty good job this year. I feel like I should be up a lot more than I am, but, I guess this, makes me think that, maybe my expectations are too high, and just being flat to slightly down to being up, even if it's only a little bit, has been a good, I've survived the year, so to speak. In hindsight, 2022 was a year you just wanted to survive. 2020 was a year to thrive. 2021 was a little bit of both. Started out okay, and then slowly deteriorated. And 2022 is a year you just want to survive, protect what you made, or protect, excuse me, most of it. The math is cruel. You dig yourself a 10% hole, you can get out of it. You make 11%, you're even. You dig yourself a 15% hole, you can get out of it. You make, I don't know the number, 17% or something to get out of it. You dig yourself a 25% hole, it's a little tougher, right? But you need to make a third to get out. And you see how the math gets worse and worse against you as you come off of your high water mark. One thing I saw that's I don't remember which trader tweeted it, but he said, as a trader, you spend 98% of your time off your highs, because your account being at highs is very fleeting, right? It might make a high and then go down for 2 or 3 days, and then make another high, and then go down for 2 or 3 weeks, and then make another high. If you're lucky, if that's how you're tracking it. And so you're almost always off your highs a little bit. The key is just not to get too far off the highs, because of the math. You can fill in that hole down 10%, down 12%, down 5%, something like that. 2022 will go down as the worst year for US IPOs since 1990. 1990 is a long time ago. 74 companies raised just $8 billion in IPOs this year. I think, Elon Musk has probably sold more than $8 billion of the Tesla this year. So it's been a really disastrous year for new issues for IPOs. And that's that's tough because we need those IPOs. That's the lifeblood of the new. We need new leadership. If we're going to have a new bull market, or when we're going to have a new bull market, there's got to be some new leadership. It cannot be based on history, Apple and Google and Tesla and Amazon leading the way. It's going to be something newer companies. So maybe they're out there already. Maybe they'll be public in 2023, 2024, but it'd be nice to get some new. We had way too much new in 2021, right, with the SPAC mania and stuff like that. So it cycles. It cycled at where anybody with half an idea could go public. To you really have to be, the due diligence is just going to be tremendous for a company to go public this year. I think Jim Ropel was on the podcast with IBD podcast with Justin and Arusha. He talked about Mobileye. I guess we can pull that up later. But the due diligence just to get that company public, probably, it's a quality company. I think I know Intel owned Mobileye, and it wasn't a spinoff, it was an actual IPO. And he felt that, said a lot about the quality of the company. So maybe that's one name to watch. That was on like his name to watch, but it's just so new. It just needs time. And maybe that's just what we need overall. So let's pull up the indexes. I'm going to turn my camera off so you can see the screen better. And here's a chart of the NASDAQ. Should be roughly up to date. The volume won't be real. You had the CPI numbers, and I don't remember when the previous CPI came out. Maybe it was here, but you had, the huge jump on the numbers previous when it wasn't as bad as people I don't want to say hoped for or expected. But this one, it's kind of the same thing, but it becomes built in, right? And the market's kind of getting numb to higher CPI or really the expectations, the what am I trying to say here? The number is still high, but it's coming down off of those highs. So it's the delta is important, and I think the market's discounting that slowly but surely. So it tried to go up and just failed miserably into the Fed news, which was Wednesday. And the Fed did exactly what they thought they were going to do, which is with the raise that they did. So the bottom line is, I just think we're going to be in a bit of a chop fest. If this is the low, it might need to go back and forth a few times. And if you're an active trader and you get, when you get a day like that where it's 5% up on the open, I think it was Linda Bradford Radke had a great saying about a gift. That's a gift. I'm not saying you have to go short, but I was by 6:31, I didn't own any longs at that point. I had a few longs like ASML. We can pull that one up, ASML and Mobileye, and I can't remember a couple of other stocks. Oh, and ETFs. I own DTH, and my objective really wasn't to sell that. I wanted to kind of hold that one longer, but my trader instincts are, when you get something like that, something out of the ordinary in your favor, you're almost always better off selling it. Even this sell, if you had sold that day and you watched it go higher for a handful of days and higher, but now look where we are. We're lower than that day. So my experience is 8 out of 10 times you get something like that, you want to be a seller or reducer. Even David Ryan was on IBD Live that morning saying he would not be adding to anything at that point. That would be like the last thing I would do is add on a day like that. The second to last thing, that what I really want to do is reduce, and last but not least would be just completely get out. So try that. If you're having a hard time, maybe just reduce a little bit. It's okay if you have 1,000 shares of XYZ and now you have 900 or 800 or 700. You really hope that you're wrong. I really hope that I'm wrong. So if I sell a portion of it and I'm wrong, it's fine. I don't have the position I had once before, but I can always find a way to get back that position a day or two or a week or two or a month or two later. And this is what I avoid, is all this volatility, because what's going to happen if I don't sell there, I'm definitely going to be selling here, because now something's wrong. It looks like something could possibly be wrong with the market, like the rally is over. And you could get a test, something like this. Wow, it came right to that line. Incredible. And an undercut, maybe the S&P doesn't undercut. That would be bullish if you could get some kind of, look how much better it is. I can't even draw any kind of trend line like that versus the NASDAQ. And then, the Dow. This is the diamond, but yeah, I don't even have anything like that. And you see how it actually closed near the higher end of the range, now down on the day. And the closing range was still in 40%, but you got a little bit support on the Dow today. But the big cap tech, it's, I don't know. I hate to say something hyperbolic like game over, but I believe it's game over. They go back and study Cisco, Intel, Dell Computer, Oracle. You go on and on. What happened when, once they hit their highs, this is the 2000 high for Oracle. And, even though it's come back, you had to endure a tremendous pullback, and you had to endure roughly 14 years of underperformance, of dead money, to get that back. Intel came back, but now it's basically, I don't know, they've kind of lost their way versus AMD. I don't think Dell is computer. It might, because they went private and came back, so you don't have the same history. But Cisco, there's the high. And so I just think we went through something like this in this last bull market we were in. It was a tremendous bull market from 09 to 2021-ish. And now we're in something like this. Now, in this time frame from 2000 to, let's just say, like this period right here, there were winners. You don't want to give up. So here's NVR. Can't even see it in 2000, right? Making new highs right there as everything else is making new lows. There were plenty of others that weren't home building related, maybe even, but so stay on top of it. But this is the theme. This is totally new. Nobody was talking about home building in 2000. Nobody. It wasn't a thing in 98, 99, 2000. There weren't, you were talking about eyeballs and things like that. So the market changed. And so the market will find its footing. It'll find a new group of leaders. And I just don't know what they are just yet, but we're definitely looking for them. Let's look at some of the ETFs that I follow, DTH. So right on the 200-day, it looks okay. I got out, like I said. I don't know. We're getting near the end of the year, and I usually like to shut it down near the end of the year. So that influenced me as well, as far as just getting flat and, getting out. So for half a minute, I was basically flat after that day, and just completely on the sidelines, even had covered my shorts. But now I think the market looks pretty weak. It could, I think, possibly that, I think a perfect scenario for a bullish setup, as crazy as it sounds, is I want this to go down here, and then I want the NASDAQ to undercut, see how easy it could undercut versus the S&P. I want the S&P won't, and the Dow won't, and the NASDAQ does. And maybe that could set us up for 2023, start of a new rally, a new bull market. Call it whatever you want, whatever makes you, whatever you need to do to participate. The bottom line is, if prices are going higher, I want in, and if they're going lower, I want out, or I want to be on the short side. Okay, let's go back to the slides. Let's go to the industry groups. Oh, I know what else I want to talk about. So as we get near the end of the year, you'll want to create a screen, I think anyways, for the best stocks this year. So in the screener, create a stock screen called 2022 year-to-date winners. Something, you can call it what you want, but the idea is I want percentage change year to date. I just chose 40%, whatever you're looking for. Obviously, the lower you go, the more stocks you're going to get. I put in a market cap filter because I don't want to see the biotechs and the crypto miners or whatever it might be that, I just don't need to see them. I won't buy them. So I removed it based with a tiny market cap, not that big. And then there were some ETFs in there. I removed those. So you can see Target Hospitality, Sting, Torm. I did own TRMD, CEIX. I did own that one, but I didn't make hardly any money in it. So it's kind of late to the game. TNK, I did okay with that one. Tidewater, I did okay with that one. And you can see, and I've sorted this by percentage change year to date. Target Hospitality, I was nowhere to be found on that. So I'll go through this and say, okay, which ones did I own? Why didn't I own them? I owned Sigma Lithium for half a minute, but I just was a little late to the game. Peabody, I didn't do very well in Peabody. I tried over and over. I just could not get a stranglehold on that one. PBF, Rhythm, and just kind of go through them and see, okay, what were the biggest winners? I've also added the sector here. Let's pull this up. So if I were to sort this by sector instead of percentage change year to date, let's reverse it for alphabetical. Aerospace, ag, some computers, but no surprise, right? Look at that. Energy. One finance. Oh, it just need to load. Finance, medical. Interesting, medicals. I bet Suave might be in here or something like that. Not too bad. And so there's the year. There's what happened this year as far as upside. Go through them. Spend a weekend day. There's only 146 of them the way I built it. Did you own any? You're not going to own half of them. You're not going to own a quarter of them. Even somebody like me who owns a lot of stocks for the year probably will own maybe 25% of these at any one time. Sometimes there might be a reason why I didn't own it, and I can kind of, but I want to see, like, I didn't own this SMCY. How come? And just see how did it trade? Well, it's kind of gappy. It jumps up, does nothing. You know what? If I go through my records, I'm pretty certain I bought SMCI there, right there, and must have got stopped 5 days later. And so I can go through and look at that based on my software that downloads my trades. And, I can see why I didn't own this stock. It looked like it's going up, went down, gapped up here. Maybe I could have bought here, but then I'd have had to wait for earnings there. Started to look good, and then it rolls over, and so on and so forth. So I can get kind of an idea on that. So this is a good exercise as far as your post analysis. If you're interested, which ones did you own? Which ones did you miss? And then also, obviously, you want to go through your trades. If you use Excel or use some kind of system, sort by your biggest winners and your biggest losers, and then analyze, depending on how many trades you do, the top 5% winners, bottom 5% losers, or maybe a little bit less. I can tell you which stocks I made the most money in this year, which ones I lost the most in. And, it helps me to recognize honestly where my weaknesses are. And so then it's, well, okay, I'm weak there. How do I fix that? if that's possible. It might just be a flat out psychology flaw. And I just, you know, I'm an old dog who you can't teach a new trick to. So I might have to avoid that. So like ENPH, for example, I don't know what it is about that stock, but I've never made money in that stock. And it's been nothing but up. Tremendous, tremendous winner. And I've never made any money in it. So why? You know, why? It's too volatile for me. You know, the daily range on it, even though it is a $300 stock, but it moves 10 points a day, at least. You know, sometimes it might be up 4, down 14, and, you know, closed up 6. It just was unruly for me. I could never manage my risk. Partly because I like to take concentrated big positions. I want a position that's going to be meaningful if I get it right. And you can't do that with end phase. At least I couldn't. Now, if I had 100 shares and just left it be, then maybe I could have made some good money in it. I'm just not very good at that because I've just not done it that way for forever. So either I have to learn to do that or I just move on. There's just so many stocks out there, so many ways to make or lose money that, you know, sometimes I think it's okay just to say, you know, I'm not good at that, and just move on. Yeah, why do I have to, you know, try to get good at that if I'm not? All right, let's go to the industry groups. I don't think there's going to be any surprise. I mean, I'm going to spend half a minute here. Oil and gas, energy, solar, contract manufacturing, oil and gas field services. I do like Tidewater, TDW. I do like SLB. The stocks don't like me back so far, but that doesn't mean it's the end of the game. So those look like they're holding up. Leisure gaming equipment. So this is new. I haven't seen this in a while. So I might review this group this weekend. Apparel, shoes. You know, I might look at that. Machinery, farming. I know what that is. That's deer and so on. So energy has lost its mojo in here. It's not dominating this area. I do, but this sticks out to me like a sore thumb. Energy, oil and gas field services. So energy has lost its luster in the last few weeks, right? If you're doing this every week, you've noticed it's just a slow bleed, but yet oil and gas field services are holding up. So that might be, if energy gets another leg, that's going to be the area. Look at this setup. It looks like, you know, giant cup with handle possibly. So what stocks are in there? Well, I know it's Schlumberger, SLB, Halliburton. Those are the two big boys. And the one that I've kind of gone to for right or wrong, Tusk, that's interesting. That's a small stock, but has been Tidewater, TDW. And I bought it there and sold it on the way up. And then I've bought it there. And I think I might have bought it there as well and got stopped. But I've tried a few times to get traction in it. And you can see it's just sitting on this line. So it's holding up really well. The relative strength is 99. It's trying. I do not own this as we sit here, for full disclosure, but it's high on my list of go-to stocks. And, you know, so that's how you'll generate ideas, just kind of that process. Stocks, let's talk about ASML. So I think this was the first CPI number or PPI or whatever it was, it jammed the market, this one. And I remember being out of ASML because I was worried about the number, and that hurt a little bit. And then I bought it back somewhere in here. And then by 6:30, well, actually it wasn't even by 6:30 Pacific time. I was selling ASML in the pre-market. I was getting out of it at 6:35, 6:38. And I don't know if that's good or bad, that pre-market. That's a whole nother video. I think it opened at like 6:40 something. So I probably would have got a better print if I had waited for the open, but sometimes I've done that and gotten worse. And, you know, now it's given back those gains, big volume here in the weekly chart. That's not my favorite pattern. That's an outside reversal on the weekly bar. What does that mean? Does it have to go lower? No, but it looks tired from this rally. This is a big rally at 400. That's 50%. If I go to NVIDIA, I think somebody was saying on a podcast that NVIDIA was 70% off the low. So 108 to 188 is 74%. And it's still 52%. I'm sorry, still 47% off its 52-week high. See how bad the math is? Imagine this is your portfolio, and your portfolio rallied 74% off the lows, but you were still down 50% off your 52-week highs. It just seems impossible. How can that be? The math doesn't seem possible. But you can see it's same thing. It tried to open higher and is giving back some of those moves. So it looks tired a little bit. This group, it's made a big move off the lows. It looks tired. Now, this company, ACLS, is very interesting. AMGL, is that the ticker? AGML? Or did I do that already? All right, why don't I just look, huh? It's on my screen here. ALGM. And I think that Jim Ropel mentioned this on the podcast. And you see relative strength at new high, 1, 2, 3, 4, 5, 6, 7 weeks up in a row. Big cup, 50% cup. Now, is that your favorite cup? No chance. So ideally you get some type of new base, and you've got a big volume move down here, which is nice. As far as if you don't own it, it's nice because it looks like, to me, this will be the left side of a base. You ever noticed that? I wonder how often that is. I've never really done a bunch of research on that, but I'm curious, like when you get like these really bad break weekly bars, how often they become the left side of a potential base. This could just be a coincidence for this stock, right? Because you have the one there and you have one there. But that's interesting. That's food for thought. I wonder if maybe I'll make that a project. And then is it AMKR is in this group? So, building some type of handle. I've got this trend line drawn. I think what I would do is I'll probably change this a little steeper, but I want to be alerted a little bit sooner. So I don't know. I'm fishing for leadership. I'm waiting for the market to tell me what the leadership is. I just don't know if it exists. It might not exist, which is why the market doesn't know and why it hasn't kind of shown its hand so far. Oh, anything else? Oh, I mentioned Mobileye as far as one of the newer IPOs. So it IPO'd at 21. And how many IPOs in the last couple of years are above their IPO price? Probably very few. So acting pretty good. Now you've got your first leg up, and ideally it would build some kind of base. So maybe something for 2023. But this is what you're doing. You're building your watch list, getting upset. Getting ready for the reset of the new leadership. Last but not least, we're going to go to the stalwarts. Apple looks very, very toppy to me. Now, it's not going to just crater down because it is Apple, but this has been a tremendous winner, and so it looks like it's probably pretty tired. at this point, I don't put a whole lot of stock in kind of that. It's breaking this neckline here. If full disclosure, I am short this. How I'm long this stock, AAPD. I'm sorry, I should say this ETF. So, and I have mentioned it when I watch these to see, do these look bullish? That looks like it could break out of that base right there. I don't think it's going to do that because it's Apple to the downside, but that looks bullish. Therefore, that doesn't look so good. Amazon, same thing. It looks very, very tired. And if you go to AMZD, you can see, look at tight areas. This is the Amazon down. Look how tight it was. So it runs up, pulls back, and then gets really tight, bounces off the 50-day. So, and then last but not least, I do have AMZD as well, and then Tesla Q. So I covered the Tesla, but then couldn't stand it for more than a day not being in it. It just looks like I'm looking for a washout. I don't know if I'm going to get it, but that's what I'm looking for. I'm looking for a day where, it's down 10 on the open or something like that. It might just have to grind lower, but this is very extended for sure. But look, if that was a stock, if you were in this, you're along this stock, it's just done everything right. Right? Runs up, pulls back to the 50-day or 10-week, runs up, pulls back to 10-week, runs up. So it's not something that, if you were a buyer, if this was just XYZ Pharmaceuticals, so far this is traded pretty well. So it looks very, very tired. And if I look at like Tesla, the stock, now I don't know where it's going, but I do know, and I'll tell you, a lot of stocks have gone at a bare minimum to the COVID highs, right? And the COVID highs for Tesla is 72. The COVID lows is 23. Keep that in mind, 23. Where? Didn't quite get there, but it definitely went to the highs or below the highs. Shopify, right? And these are monthly charts. There's the high and low, all the way back. Twilio, much worse. Datadog, you get the picture. Almost everything has round tripped that whole COVID bull market. Almost everything, not everything, but almost. And so it just feels like this is the last of the great leaders. That's my target for whatever it's worth. Now, am I going to be there if it gets there? If it gets there, will I be there for the whole way down? The truth is most likely, almost for certainly no, but I'm going to capture some of it if that were to happen. So, and then this, remember, this is a monthly chart. All right. So how are we going to find some leadership? We're going to do a year-to-date screen. That way we can see what led this year. We're going to review which ones did we own, which ones should we have owned. Do they meet our criteria? Could we have gotten them? And there'll be plenty that you just never would have owned anyways. So don't worry that they went up a lot without you. That's going to happen all the time in every great bull market, and even in every great bad market so far. All right, so let's last but not least, the quote of the day, or the quote of the week, I should say. And I apologize if I've used this before. I sometimes hear or see or read a really great quote, and I just add it to my deck and I put them below, and I just keep them, to try to. I'd really, in perfect world, the quote of the week will have some kind of meaning to the type of market we're in, right? That would make most sense. So Lisa Franks was on a podcast. I think it was a podcast. Whatever got you into this downdraft of a bear market is not going to lead you out of the bear market. I believe that wholeheartedly. It's Bill says 3 out of 4 stocks will, won't, or maybe 1 out of 4 will come back. I don't know what the number is, but the number is heavily skewed against it happening. Some of them come back, but most of them will not. If tech went up almost 10% from the spring of 2009 and consumer discretionary was probably slightly less, you're not going to do well to still own those stocks. And I assume she means 10% a year on average. And those stocks are Apple, Amazon, Facebook. What led the great bull market from 09 to 2020, 2021? NVIDIA. So those are previous leadership. Now, if I name 10 stocks, maybe 2 of them will come back and be part of the next leg up, but the 8 of them won't be. It's something like that. You have to be in leadership. We just beat that to death, and I do see on Twitter a lot, people say, well, what are your 3 favorite stocks, or what are your TMLs, or what stocks are on your watch list? What are the 3 market leaders you have? And so they're thinking, it's the right thinking for sure. I just don't know if I don't believe at this very moment the market has been able to identify what the new leadership will be in the next leg. So you have to be patient, but you got to be in the leadership. You have to be in those next leading stocks. And it could be any kind of group. It could be biotech, could be semis, could be oil and gas. I don't know. You have to be open to, could be retail. It could be any of those. You got to be open to finding them. And the way to do that is just stay on top of those industry groups once a week. That's more than enough. You're looking for a big sea change. And so it doesn't, it's not like you have to identify it on a Wednesday, otherwise you miss the trade. So you're looking for a sea change that will last 3, 6, 9, 12 months. Or if we get a long enough bear market, you get a new bull market, you think about the sea change from March 09 to 2021. The leadership there was a long, big runway. CRM, Salesforce, incredible move. And it just looks like that there's been a big sea change in that stock. It's come a bunch off the highs, and it probably will look like Oracle, a long sideways in a big range going forward. All right. Contact information, marketsmithinvestors.com, 800-424-9033. Today is the 16th of December, so that gives me 2 more potential take on the markets before the year is up. I would guess you'll probably get 1 more. I don't know if it'll be next Friday or the following Friday. I thought about passing on this one. I just don't think there was a ton really going on, but there was a little bit, right? You had the Fed, the CPI move, and you had the market has made a bit of a change. I believe IBD is, I know they've gone from, uptrend to uptrend under pressure. So there was a little bit that happened this week, which constituted that I had plenty to talk about. We will see you guys in a week or 2. Have a great weekend. Bye, everyone.